Hello and welcome. This is Tom here from Own Don't Rent, making your home ownership dream a reality. Today in this video we got here Gayle from Dollar at Work for you today, joining us today to show you how you can own your own home sooner. So, hi Gayle, thank you so much for being here with us today.
Thanks Tom, it's a pleasure.
Yeah, for the benefit of people out there who want to own their own home sooner, would you mind telling me a bit about yourself?
Okay, I've been in the financial services area for around 20 years now. The last 5 of these I've spent conducting seminars nationwide, and mainly for the benefit of employees for large organisations such as Clubs New South Wales. And during these seminars, the seminars have been put together.
I was there. So
you were there, right. They were to provide information to allow people to make informed decisions when making the biggest purchase of their life, which is a home.
Right.
Okay.
And from how long have you been doing this again?
20 years.
20 years, okay. From the 20 years experience you've been doing this, could you tell us a little bit about like what kind of people are not qualified for the bank loan?
Well, as you know, getting a loan is getting tougher, and has been increasing. Things that were a tick and flick years ago just don't happen anymore. So the average person that does qualify for a loan really doesn't have many more decisions to make other than which lender to choose. Really? But for the person who the bank says no to, where do they go?
Yeah, where does they go to?
Well, if they go to a non-conforming lender, they'll be paying very high interest rates.
What kind of interest rate they have to pay this
I just did one the other day, 9.44, $14,000 to get into the loan.
What that $14,000 for?
That's what the broker charged them for a mandate fee.
Really?
Yep.
That's a lot of money, $14,000.
It surely is, and then on top of that, they had to pay a mortgage insurance risk fee of 1% of the total loan. And should they exit that loan within the next 4 years, they'll pay a 1.5 exit fee.
Wow, so...
This is just horrendous.
Okay.
And it only occurred because the couple had 5 minor defaults on their credit report.
Really?
Yep.
Okay, I have a few questions to ask you right here. So you're saying that they have to pay 9-point-something%. Okay, what is the normal loan interest rate right
Well,
now?
we have a variety. You'd expect to pay in this current time, around about 7.34.
So basically they pay around 2% higher.
Yes, of course.
So let's say $300,000, they pay 2% higher. B is they have to pay $14,000 to get in. Plus that they have to pay the mortgage insurance as well.
Yes.
Plus the money that they have to pay if they exit 4 years.
That's if they exit the loan within the first few years.
Wow! So someone who got bad credit for $300,000, they need at least $30,000 for getting 10%, plus 14, that's 44, plus say $7,000 for the mortgage insurance. Yeah. That how much that is? 50.
They're virtually wasting $50,000. So that's
or
why
nothing.
I was so excited when I saw your option.
Right.
For me, it means not having to put these people into that type of loan.
Right. Okay.
It's unconscionable that people would have to do that.
It is amazing.
Yeah. So when I saw your option, I thought, well, this is a way to get people bank ready.
Right. Okay, so let's go back to our service here. What we do, that that we are in the business of helping people to own their own home through the rent to buy or through seller finance. What does that mean is when they are buying a house with us, they want to swap to the banking system later on. So most of the people that we help to own their own home to rent to buy or seller finance, they got the loan with us, they're moving in right away, they only pay 1% higher than the bank. And would you mind, based on the experience, would you mind tell us that once they stay with us, what do they have to do in order for them to get the bank ready?
Well, I guess the ideal person that you'll be putting into a house is somebody who the bank has said no to,
right.
Desperate to put their family in their own home and start paying off their own home rather than paying rent.
Right.
So to get them bank ready, as we say, they would need to demonstrate that they can actually create a savings history that is demonstrated to the bank when they go for a loan.
Yeah.
That's what you do, so that's great. They're able to move into their house, and this is the great part, because they treat it as their own. They can make improvements to the house. So when they're bank ready, it may be that the improvements in the way they've looked after the house, plus the capital growth of the market, has given them a lot of equity. So, you know, maybe 20%. We don't know how the market goes. But certainly enough to say, yes, we have a decent deposit. This is what we've saved. I fit all the criteria for a normal loan.
Okay.
But the beauty is, from day one, they're in the house that they want to be in.
Yeah, and also I'm not sure whether you know this or not, but the price that when we sell them the house on a rent to buy or sell or finance, what are the price, say $300,000 today, is fixed in?
Yes, that's the
never
best
move.
thing.
Yeah.
It's a locked-in price, so it's not going to change between 2011 and 2014. It's the same purchase price that they bought it at today, so they know it's a safety net for them, really.
Yeah. Now I want to get back to the traditional way a little bit for people out there who want to understand more with where they're at and what option that they have. So for the person who got bad credit history, don't have enough deposit right now, the bank says no. Before the rent to buy and the rent to finance exist, what those people they have to do in order for them to own their own home?
Well, in most cases, it's getting further and further away for their ability, because they're paying rent but they're trying to save for a deposit at the same time. Even if they've got the first homeowners grant, it's not going to be enough, so it's moving further and further away for them.
Right.
For example, if you were to have the opportunity today to buy a $280,000 unit and you waited 1 year, the real cost of waiting is $77,000, and that's based on interest rates, the deposit getting larger because the price has gone up, and also I lost my track then. It's gone up because that, and that's the most important thing. They could end up paying over $100,000 more in interest rates than they really have to.
For $280,000 house.
Yeah.
Wow. So what does that mean is, if they don't have other option, they have to wait for their credit history clean and clear. They have to save their money. They got all the tax and everything ready for them to get the loan. And by the time they save, will take them how long you reckon? Say 1 year, 2 years, or 3 years?
Maybe longer, maybe 5.
Yes, let's say about 3 years. So the house at 280 today. If in 3 years' time, what do you think is, based on a Sydney market?
I would say you'd probably be looking at 340 to 360. Right.
So let's say at 340, from 280 to 340, they miss out on another $60,000. They save. Now they have to save more money.
That's right. The $28,000 deposit they had today has to become 34.
Okay, cool.
So that's it. And during the period, and they might be in the rent to own situation, what can happen that in the background we can work to try and get their credit history cleaned up for them as well.
Right, okay. And also that if someone who haven't got any credit, say no credit, what we could do is they move into our house, they're paying the money that they pay every week. We got a statement for them that they've been paying for us, say for 1 year or 2 years or 3 years. What does that mean is, that statement, when I give it to you and you show the bank this is a client here that's been paying on time every time, does it help?
Oh, yeah. Yes, it really helps, because you've demonstrated what they're looking for, what the bank is looking for is good conduct of a loan.
Right.
So that shows that they are disciplined.
Yeah.
And of course the property's increased while they've been living there, so it looks good to the bank. It ticks all the boxes then.
So really we are just here to like a stepping stone between where they are now into the banking system later. That's what we do.
I think you're a bit more than a stepping stone.
Yeah, thank you so much.
It is the opportunity for people to own their own home, and it's just wonderful, I think.
Yeah, you know what? Years ago, I actually in the same situation with what all the people out there. I got bad credit history. I didn't have enough deposit. The bank absolutely didn't want to talk to me. But lucky enough, I did find a way to buy the house without the bank. And since then, we use this method. I study a lot about it, and we've been helping a lot of people to own their own home today. So thank you so much for watching the video. This is Tom from owndon'trent.com.au, and you also hear Gayle from Dollar at Work for You. Do you have a website or a phone number for someone who wants to know?
With a Z, Dollars at Work for You, and it's just a number 4 and a capital U, or you can contact me direct for any mortgage inquiries you have, anything at all really. 0425 204477.
Cool. I hope this helps. Until then, have a great day. Thank you so much for watching video. Thank you.